In this particular chapter, we are discussing the accounting for fiduciary activities of state and local governments. In particular, we are looking at how they need to account for these types of relationships, and we have four distinct areas that we're going to be looking at. We're going to look at custodial funds, investment trust funds, private purpose trust funds, and pension and other post-employment benefit trust funds. All right, so if you guys will notice on this particular slide, I put the words trust in all caps. So the custodial funds are one thing and the trust funds are something else. And we're going to dive into each one of these areas individually. But for right now, let's talk about how do we go about figuring out if the government has a fiduciary relationship. So what we have to do is look at the situation and decide, is it fiduciary, and if so, how do we need to account for it? Again, the key word here is fiduciary. All right, so basically what we're talking about is when the government has been given custody and oversight duties of assets that are for the benefit of others, other governments other than the current government that we're dealing with, individuals, and organizations. All of these are parties external to the government. So the assets that we're talking about are not assets of the government. They're not the property of the government. The government is only acting as a custodian or acting as a trustee. The government cannot spend it, etc. Now, something we need to consider, as we have learned about this earlier in regards to our earlier discussions, if assets are held in trust for the benefit of the government's own programs or the government's citizens, we discussed that type of fund being covered as a governmental fund. All right, so governmental funds are one thing, fiduciary funds are something else. So when the government is a beneficiary or the government's citizens are a beneficiary through the government, then we call those public purpose trust. Public purpose. Notice that on this one says private purpose. The public purpose trust we talked about earlier when we were covering governmental funds. All right, so with those types of public purpose trust, we said we could use either a permanent fund. That's when the amount was received like an endowment, and it permanently, the endowment amount, the principal portion has to permanently stay intact, but the interest thereon can be spent for an intended purpose. So we would use a permanent fund for those types of public purpose. But if we happen to have type of endowment where it is the principal and the interest can actually be spent for the government's purpose or for its citizens' purposes, then we could account for those in a special revenue fund. Again, the permanent fund and the special revenue funds, those were governmental fund types. All right, so if you need to, go back and look at those. Again, public purpose. When we had those types of funds, those were included in the statement of net position at the government-wide level and the statement of activities at the government-wide level. But here what we're looking at in this chapter is different. These are fiduciary funds, and they are only reported in the fiduciary fund financial statements. Only recording journal entries at the fund level. Only putting together financial statements at the fund level. We are not doing anything regarding the government-wide statement of activities or statement of net position in regards to these fiduciary funds that we're looking at in this chapter. All right, so we're looking at basically private purpose types of funds. All right, so in regards to how do we go about determining whether or not a fiduciary relationship exists, GASB has 3 general criteria set out for determining whether yes or no a government has a fiduciary relationship. Number 1, if the assets for the activity are controlled by the government, in other words, holds the asset or has the ability to determine how it will be used, including selling off or exchanging in order to provide the intended recipients with benefits. And 2, the assets were not generated by the government in any transaction, exchange, or non-exchange. And 3, the government does not benefit from the assets. All right, so if that's the case and all those 3 criteria are met, because it's a and 1 and 2 and 3, then we do have a fiduciary relationship. We're the custodian, we're the trustee. It's for the benefit of others outside the government or the public at large. And the government didn't generate the assets, and the government does not benefit from the assets. All right, so if that's the case, then we have a fiduciary relationship, and we need to use one of these types of funds to account for the fiduciary oversight and administration of the money. And we're going to go into each one in its own detailed video. I might combine 2 into 1, but mostly one at a